thank you for watching Stockbusters at taipanfinancialnews.com. I'm your host, Sandy Franks. Today we're going to tell you about a stock that you should remove immediately from your portfolio. You'll be surprised to learn the stock we're focusing on makes that delicious confection we call chocolate. Now, don't get me wrong, we have nothing against the brown stuff. We love chocolate as much as the next person. In fact, did you know the average American eats 10 to 12 pounds of chocolate a year compared to the Swiss who manage to eat 21 pounds a year? But at Stockbusters, what we absolutely hate is a company that, while on the surface looks like a good investment, is actually a disaster to your portfolio. Here to tell you about the chocolate company that isn't worth your investing dollars is Sarah Nunnally. Sarah is the senior editor of Material Profits and senior analyst for Wildcatter. She's been a featured guest on dozens of television shows, including Forbes on Fox and Cavuto on Business. So Sarah, let's jump right into this. What's the company you're advising viewers to stay away from?
Rocky Mountain Chocolate Factory, the symbol's RMCF. Its franchise business model has about 300 stores in its operation, and they're located in the U.S., Canada, Guam, and the United Arab Emirates.
Well, why are you suggesting viewers avoid Rocky Mountain Chocolate Factory? After all, I read that they were ranked 46 out of Forbes' top 100 companies. It sounds like it would be worth an investing.
Well, first, despite these exotic locations, RMCF is not really a global company. With just 4 stores between Guam and the United Arab Emirates, don't expect a big boost in sales from these locations. And while its story is also charming, it's located in Durango on the western slope of the Rocky Mountains, don't expect RMCF stock to be much for longer. The stock had a sharp pullback from its high on July 20th, 2005, and since then, RMCF has never really gotten its groove back. It could be trending slightly higher, but I fear the bottom just might fall out.
Well, what's contributing to the pullback?
Well, leading up to the pullback, RMCF had been performing superbly. And then on July 12, 2005, they announced a 27% increase in first quarter earnings. The company had a strong spike in volume and money flowing into the stock, but at the time, the company wasn't strong enough to sustain that type of influx. It's like blowing too much air into a balloon. So RMCF eventually topped out at about $25.45 and collapsed all the way back down to $11.67. And since then, the stock has not been able to get above $15.50.
But Sarah, I just read that the company reported record revenues and earnings for the third quarter of 2006. Certainly that would suggest this company is on an upward swing, right?
You would think that would be the case, but the stock hasn't responded. In fact, since the announcement, RMCF has actually fallen 3%.
I also saw that the company announced it's going to open 6 to 8 stores in January and February. That would bring the number of new store openings between 38 and 40. Now, that doesn't sound like a company in trouble to me.
Well, that's true, but keep in mind that number is less than what the company planned to open. And while these new stores will help bring in new sales revenue, we've already seen that stellar earnings reports don't have a huge positive impact on the stock.
Okay, so you think the company is headed for trouble. Can you quantify for us what you think the stock will do?
From a technical point of view, RMCF's looking at a drop of about $7, and that's roughly 50% of its current value. We know the stock's been having trouble getting above the $15 level for the past 8 months, and I expect that resistance to continue and even increase.
Okay, Sarah, if I understand correctly, you profile what we call Stockbusters in every issue of Material Profits, correct?
Absolutely. Every month we talk about ways to secure your portfolio and highlight some stocks that could negatively affect your portfolio's health. Not only are we warning readers about companies with strong downside tendencies, we're also reminding investors to truly examine their holdings and get involved on a monthly basis.
So bottom line, Rocky Mountain Chocolate Factory is...
The downside risk far outweighs the upside potential at this point, and we could see a 50% drop in value. That's just not worth the risk.
Okay, well, thank you very much for the information, Sarah. I hate to tell you this, but don't expect the company to send you a box of chocolates anytime soon.
Okay.
So there it is, folks. Sarah says stay away from Rocky Mountain Chocolate Factory. If you'd like to see the other stocks Sarah suggests are also Stockbusters, then please feel free to join Material Profits. You'll see a sign of information at taipanfinancialnews.com. Have a great week. Thank you for watching Stockbusters.